Hi, Larry Gaines, PowerCycleTrading.com. Well, we've been putting into kind of focus Apple lately for some really great trade setups. It's starting to actually now start to break out. But I want to show you a strategy that we use quite a bit, and it's what we call the calendar diagonal. Now, this is a great option strategy because it lets you kind of hang with the trade, and you can kind of play it like a covered call. You can adjust the trade and stay with it if it's kind of churning sideways. Now, it's also a really great trading strategy for kind of what we call a pre-earnings trend trade. So as we approach and head into an earnings date release for whatever, for a specific company, the implied volatility on that stock or the series with the weekly, options where they will announce will go up from the implied volatility, increasing due to the uncertainty around the earnings. So this is one strategy to take advantage of that. So I did a video last night on using it for that situation. And this is another video I wanted to show you. This was another Apple trade that we set up back on the 22nd of March. So we were into this trade for about 3 weeks and had some, the markets pulled back, and this thing was a great vehicle, great strategy because we were able to adjust it while we waited for the market to turn. So I wanted to kind of walk you through how this worked. So we set this up on the 22nd and it was trading at 123.50, and it's just been churning sideways for about 3 weeks. And so here, this is our alert service that I run. So you can see here it says new long Apple trading at 123.50. And so it says to buy a call calendar diagonal debit spread, and it goes through the instructions of how to set that up. So it says buy to open the 23 April, 26 March, 124, 128 call calendar at $3.95. So you can see we started this trade off at around $4 on the 22nd, and then did multiple of adjustments and ended up today with a sent out alert to start taking profits. So this alert was today on the 8th, sent out to say, oh, okay, Apple's trading at 129.60, hit our price target 3 at 130, start taking profits. And so it just gives you a lot of flexibility of things to do. So I'm going to go through the trade with you and I'll show you what I'm talking about. So we set this trade up based on our trading model giving us a long signal. You see these arrows, that's kind of the trigger signal, and it's based on momentum. But I've been watching this ever since it sold off. And so this is also what we call a volatility squeeze, and this was a daily time frame. So we went long the 22nd of March, and then you can see it just really kind of stalled and never could get back above this 21 period moving average. And the markets on the NASDAQ had come out pretty good. So, but it held, it was churning, and our momentum indicators were keeping us into the trade on the lower time frames as well. And then we started finally yesterday getting a break to the upside. So we initially had a target here to 130, hit there today, so sent out a profit take. But this has more potential to the upside. So the other thing we can do with this is we can make another adjustment to close out our short strike if we want, and see if we can get a bigger move to the upside, which I think it has potential for. So it's a great strategy for kind of also a trend trade into earnings to take advantage of the implied volatility, which tends to increase, as well as direction. So here's the trade and what it looks like. Now we've had multiple adjustments on this trade. We started long the 23 April 124 call. That was back on the 22nd and paid $419, so $419. And at the same time though, we set a spread against it, so we sold short a 128 strike against it, and that was in a March series. But anyway, you can see the different adjustments. We hit 419, adjusted down to 404, then 341, then dropped it down to 261. Then we did another adjustment to close out a short strike that was starting to be touched, and that increased our trade a bit, but currently sitting into it at an adjusted price of 374, and today it went out at 705. So really nice gain there. Now the way that this works is kind of like a covered call. Then instead of owning the shares, we own these long dated, and then what we did, we sell against it a short dated, so sold against it the 16 April 130 call. And so we're into the spread at currently the spread price of $276 per spread, and today it went out up $224. So let's take a look at the spread itself. So the spread itself then is we're long the 23 April 124 and then sold the 16 April 130, $276 per spread. It went out at 501, so up 224. So it's up about 80%. But the beauty of this trading strategy is that if we want, we can close out this 16 spread, the 130 short, and roll that further up and try to stay with the trade for a longer move to the upside. So again, it's a great strategy for just kind of a longer term directional trade, but it's also a really good strategy for kind of a pre-earnings trend trade to take advantage of volatility as it expands going into an earnings release. So if you'd like to learn more about it, I'll be doing actually a workshop on all kinds of different earnings strategies, and this will be one of them covered this Saturday. So join us if you can. Good luck trading.